Seamus Fernandez, good to have you on the show. It's interesting. You downgraded Merck last year. Keytruda, which is one of their key drugs, was one of the reasons for the downgrade. You cited what you called concentration of that drug. Now it's being viewed as one of the catalysts, Keytruda is. How so?
So I think more so the catalysts are going to be the pipeline for the company. And we got some great news this morning. I guess we better to be lucky than good in some cases. We upgraded the stock this morning largely on the acquisition of Acceleron that they did more than a year ago. And the work that we did on that pipeline asset, so sotatercept, really got us excited from work that we did with some experts in the field. We see this as, potential $4 billion product for Merck over time. And that's something that can actually reduce Keytruda's concentration risk. Another positive is just the pace at which Keytruda is actually coming and growing in the market right now, as well as Gardasil, their HPV vaccine. Both of those products are growing, frankly, faster than expected, delivered an extremely strong second quarter. We're anticipating a strong third quarter as well for both products. And I think, frankly, in 2023, we're likely to see, Merck as one of the companies that actually can deliver upside to consensus estimates next year. One of the drivers there was also a positive decision that Merck had from a patent perspective on their large diabetes product, Januvia. So we don't think that that's really factored into consensus expectations yet. And we're also, quite positive on that being able to bridge to potential improvements in Merck's overall pipeline portfolio, including potential extensions of Keytruda's life cycle, where they're developing a number of new products in combination with Keytruda.
So I was going to ask you, what percentage of their revenues come from Keytruda and Gardasil?
Yeah, so Keytruda and Gardasil probably represent over 60% of Merck's revenue, in the middle of this decade. So, that's definitely going to be major drivers of the overall story. The major, sort of decision point in Merck going forward is going to be whether or not they can extend the Keytruda, the Keytruda story beyond 2029 and 2031. So you have two different sort of patent lives, one overseas that goes longer to 2031, and in the U.S., it's December of 2028. So there's a number of years between now and then that we think Merck can really build a potential lifecycle management strategy around Keytruda. And we're going to see some major clinical trials emerging in the next 2 years. But another part of that is also what's happening in the rest of the pipeline for Merck that can actually mitigate the loss of Keytruda in the second half of the decade. And a couple of the products that we highlight in our report this morning is a product called V116, which is a pneumococcal vaccine for adult pneumococcal disease. You would know Prevnar 20 from Pfizer is actually dominating the market today. There may be an adult opportunity there for Merck to really compete effectively. And then separate from that is their PCSK9 oral product that's in development right now.